Good afternoon, everybody. Welcome to your Friday edition, the weekend edition of TraderMerlin. Today we are, and a nice shout out to everybody. Hope you had a good day. I told you I was switching it up. I'm going with the oldest distillery in New York. It's called in New York City. Called Kings County, going straight bourbon today. Good day. So anyway, cheers to everybody out there. Hope you had a fantastic trading week. Lots of activity. We're going to look at a whole bunch of charts here today to start things off. So hello, Margaret and Chris and Roberto. Good to see you, Mario, John, Ivzy, Tom as well. Big Les Gold, Siraj, Tomasino, Walter, David. Yes, and David, thanks for the emails. You've been sending me some pretty cool crypto stuff as well. I appreciate that. And Skilled Stocksman, you beat everybody today. Kenny Taylor. Anyway, good to see everybody. Tibor as well. So let me just take a sip here, and then we'll just dive right into the trading week that was and what may be going forward. So for 17th, not anything groundbreaking with regards to economic announcements, but there was some nice price moves. So let me start things off with kind of a summary of the broad indexes. Now, don't boo or hiss me because I'm bringing up TradeStation now. I know I'm anti-TradeStation at this point, but I just wanted to show you this graph here. This is something I look at regularly. I built it a long time ago, and really all it is, it's trying to show me kind of how the markets are performing overall, and I can do that from any period of time. So what I did is I started off from Monday's trading session. That's where we're anchored from. From Monday's open, you can see a pretty big spread here. You know, the worst performer out there was technology, down 3.745%. That's this blue one at the bottom. So pretty much down the entire week from the opening bell on Monday. That was tech. And then your best performer way up here at the top is 2.028%. That was pretty much positive the entire week, and that's healthcare, which tends to do rather well in downward environments. Hey, Amy, good to see you. Hope you finished that puzzle, right? You're done with that 3,000 piece Wizard of Oz, Harry Potter puzzle? You're going to finish it. And GD, good to see you. And you're wondering, well, how does it all stack up? Where's the midpoint? What's our reference point? That's actually this little guy right here. I'll put some little black squares on that line. That's the S&P 500, which was down 1.69% on the week. So all in all, from the major index perspective, pretty negative, although depending on what sector you're in, it could have been a lot worse or significantly better. Now, we could, if we wanted to, go back and look at broader time frames, etc. But I just like to see what it's done for the week. And as we progress, we'll look at more charts where we can actually break down each individual one like this right here. So let me start at the bottom and work our way up. Obviously, the crude oil chart gets completely distorted because of those lows we saw back in April of 2020. But all in all, things are looking great, even though it was your worst performer there today. Down 2.87% on the session. But if you look at it, what's it really doing? It's not doing anything, right? It's just really just sitting sideways for the past 8 sessions. So even though you had a big down day, not that big of a deal with regards to any technical break or any level break. So, well, we'll just wait for the next move. And maybe what I'll do, we use the yellow box here a lot. Maybe I'll go to the tiny little yellow box there. He's so cute. I'm going to put it with a little bit of an extended outward piece. So we'll just see how it fares. But right now, it seems to be stuck in that tiny little yellow box. A breakdown of that, come out Monday. Hey, great shorting opportunity. Heading back down to that, maybe that 61.84 mark that we saw it bottom out back in August of this year. So that was your worst performer. The slide in crypto continues. That was really not a surprise. I've been saying that. I think it's going to keep on going and going. I think you'll probably see Bitcoin test that 42,000 mark, which obviously would be bad for my overall portfolio, but I did move some stuff into cash, and I'll be able to buy back in as well as maybe fund some more capital into it. But the whole crypto space really taking a drubbing, if you will, over the past 3 weeks or so. 2.2 down for Bitcoin on the day, but also notice it also is kind of, at least the trajectory down has slowed a little bit. It's kind of consolidated for the past 6 sessions, 6 or 7, in this range between a low right around 46,000 to a range of about 50,000. Yellow box for life. That's it. I'm going to make the yellow box t-shirts. Only you guys will get it. We've got 36 live here today, so only 36 people will get it. All right, now we're moving on up. YM, this was interesting is the Dow was actually holding pretty strong this morning as everything else was tanking, and then all of a sudden it gave up the ghost. On the day, you're looking at down 1.2%, pretty much erasing all of the gains for the week in one candle. Still holding well with regards to technicals. I mean, it's still got a long way to go to this 34,000 mark, which to me is the next major milestone. So nothing noteworthy on my end from the Dow. S&P we just looked at, again, kind of holding those lows. It didn't really rally at all today. Didn't break any lows, or at least stay below any significant lows. So it's really just holding pattern for these major market indexes. NASDAQ on the day down 0.25%. Same thing. right? I have my target there, which we'll see if that hits next week. By the way, all my options expired worthless today, which is great. I love when all my puts end up worthless and somebody bought them from me. So you guys paid money for something that just turned into garbage, and I got paid. That's your NASDAQ. Again, I do think you'll see some weakness kick in. I'm getting this kind of weird feeling. I get this weird feeling that that over this weekend, you're going to start to hear more people talking about the negativity of inflation, because you had the ECB making comments about it, although they didn't really do anything drastic. You saw the UK raise their rates by 0.15 basis points. Not like that's a huge jump up, but it does show that the global community is in fact looking at it going, okay, we better do something to slow this down. And again, you're hearing more. My guess is in the next couple weeks, you'll hear a lot of analysts talking about how they're stuck in a corner and they can't do anything. They're a little bit late to the party. We've been saying that for quite a while. So that was your number 4, I guess, on the list. I don't even know where we're at on the list. But going up here to gold, really love seeing golds and silvers bounce today, although they finished on a negative note. Notice the gold futures here, really 2 days in a row of pretty nice moves. We bottomed out just a couple days ago on the 15th of December, right around 1750, and today we shot all the way up to a high of 1815. So a nice, $60 move on silver in just 3 days. Not too shabby. Now, of course, there's a long way to go before we get back up to these highs, but it's nice to see it break out of this malaise, this congestion. It's been stuck in over here for the better part of 3 or 4 weeks now. So that was a good one. Just on the side note, SLV, I'm still underwater on my silver, but it was nice to see that bounce as well, although it's not as strong as gold, right? 15 basis points, that's what they call it. So 100 basis points, Margaret, would be a full percentage. When they say 25 basis points, that's 0.25. That's kind of industry norm around the world. So when you hear any sort of press conference regarding interest rate increases, they'll say, oh, we're going to raise by 25 basis points. Well, that's 0.25%. Turkey just did a full 100 basis point raise in their interest rate, which of course jumps them up a full percentage point. There you go. You want the yellow box in the gold chart? Where should we put it on the gold chart? I don't know. I don't really see a great spot for it on the gold chart here. I guess you could start mapping out something like this just as a point of reference, because we did double bottom. Of course, we did talk about the double bottom the other day, which is a great bounce point, right? Nice double bottom bounce out of that. What we need, though, is we need follow through, right? I've got to get some follow through back up and hopefully close this gap on gold and silver. That's silver I'm looking at. Let's go look at GLD just for fun. Oh, you're referencing that one. That one, we put that one in a couple weeks ago. I think, Margaret, the other day you said something about an island reversal. This right here is a great island reversal. This is on gold, and you can see that there's a complete separation. There's a total gap both to the upside and to the downside where price doesn't touch it, right? So this is a classic island reversal. And everyone's like, well, how do you trade an island reversal? You get lucky. That's really how you trade it. Because are you going to short it when it's just congesting here after a big move up? No. Here, let's go to lesson day, right? Let's just do lesson. So if you guys have this chart right here, would you think about shorting this one? No, you wouldn't, because why? It's got 1, 2, 3 breakaway gaps, which have gapped and just run higher, right? Just looking great, and it's consolidating at those highs. This tells me that this thing wants to go higher. And then all of a sudden you get that next day where it gaps down. You're like, oh, well, I would have shorted it and made that money. If anybody tells you they would have shorted that one, they're an idiot. They're lying through their teeth. They wouldn't have shorted that one. It's just no way you would have gotten in short on this, on GLD. Maybe on gold futures, which has a slightly different picture, right? Because gold futures were actually trading, so you could have gotten short the gold futures at this point once it started to break lows, but you also don't have an island reversal on the gold futures due to the 24-hour nature of the markets. Do you see us doing 325 basis points next year? Rick, I absolutely do. And, the pessimist in me, which I need to rein in my pessimism sometimes, but remember, in September, it was supposed to be 1 rate increase. That was the thought, was 1 rate increase in 2020 or 2022. Time is flying, guys. Man, it seems like it was just in 2019. Now we're jumping into 2022. Now, all of a sudden, if you looked at the dot plot, which the Fed just released, right? They released it at the meeting yesterday or on Wednesday. The dot plot shows nobody is thinking rates are going to stay the same. Everybody is higher. So there was 1 vote for 25 basis point increase. There was 5 votes for 50 basis point increase, and then the vast majority of the voting members said 75 basis point increases. That's the 3 increases from here. That's substantial. And, it's not like that's going to absolutely derail the market, but it's definitely putting the brakes on and is doing it rather aggressively. Normally, those members, what they generally do is they'll downplay it a little bit. So for me, when I see that many members saying 75 basis point increase for next year, it almost makes me feel like it should be 4 and they're just downplaying it. Because they never want to say too high and then back down. They're always saying a lot lower than they really think it is, because you don't want to start precipitating fear in the marketplace. Basis points are a pet peeve for me. Just used to, I know. I'm trying to be the industry way, man. I got to sound smart. I'm with you. Basis points, right? Yeah, 0.25 or a tenth of a percent. I mean, you could say a tenth of a percent, a quarter of a percent. That's better. We'll try to change that for this show, Tom. It makes me think too much. You're not supposed to be thinking. You just let it all flow. All right. On that note, it calls for a nice sip of whiskey. All right, and that leaves us with one. Ooh, that was a good one. That leaves us with one more market index to go, and that's the Russell 2000, which was shining star today, guys. The Russell was up 0.99%. Everything else except gold was down on the day. And there's the Russell going, here, hold my beer. Let me beat that one, and I'll go positive on the day. Still within. I'm hoping, Tom, maybe you got some condors written on that one. But right off those lows again, right? That tail today was getting very close to that lower line, which is 2100 on the RTY futures. Looking great. I think it looks absolutely fantastic. Still, that yellow box, even though the top is violated, I still think that the bottom is in place until we actually get a close below 2100 on the Russell. So there you go. That's your broad market recap overview. What I'm going to do is go into another listener question. I used to do a segment, a full show special on this one, but I think I've done it so many times in the past that I wasn't going to do it again this year. But it's funny, I get questions about it all the time, especially as we end the year. And that question is, drum roll please, can you talk about the Santa Claus rally? I hear about it, but what's the science behind it, from Lee? Well, it really is, it's just an analysis of historical price action. And there's a lot of, we'll just say calendar things that people like to use. So for example, one of the big ones is, as goes January, so goes the rest of the year. Meaning if January is down, then generally you're going to have the rest of the year is going to be down, or at least the year ending down. And it's not like these mantras are there for no reason. There's historical precedent. You can go back and look at statistical evidence and see that over the course of time, if January is a bullish month, then usually the year finishes positive, but not always. Same thing like sell in May and go away. You have the Santa Claus rally. These types of market mantras have a place, and I think they're extremely valuable. The thing you got to remember is it all works until it doesn't. And if the statistical average is that it does work, then the odds are slightly in your favor. But if you're wrong and the market doesn't have that quote-unquote Santa Claus rally that year, you better have a stop loss and bail out of your position. So if you go from 1950 to 2019, I don't have the most recent data. I got to get my new Trader's Almanac, and maybe I'll get Jeffrey on the program. If you go from 1950 to 2019, the average for the quote-unquote Santa Claus rally is 1.13% to the upside. Now, what is this? When does it start? When does it end? The metrics that's used by the Stock Trader's Almanac is looking at the last 5 trading days of the year and the first 2 of the new year. Those 7 trading days are the quote-unquote Santa Claus rally. And again, from 1950 to 2019, it was an increase of 1.13%. So you're thinking, okay, I've got a pretty good chance of pulling in about 1% if I buy on the last 5 days of December and sell January 3rd. Well, remember, it doesn't always work. So in 2014, we were down 3% for that period of time, and in 2015, we were down 2.2%. So it doesn't always work. Yes, Stock Trader's Almanac has tons of stuff. They got so much statistics in there. Again, if you know somebody who's in the financial world and is kind of a geek and likes the markets, get them the Stock Trader's Almanac. I mean, it's expensive. It really is expensive, but it's a great book. It's one of those ones that once you start flipping the pages, it's kind of hard to put down. There's so many great stats, and just, I'm a statistics guy. You can tell me all the things that you hypothesize about a company or a price chart or anything, but it's the stats, it's the numbers, it's the actual data that to me is the driving factor. So yes, it's a great book. At the end of the show today, you have to say, no way, forget it. Not gonna happen. I'm gonna say it 5 times at the beginning of the show, with or without risky. See, now you're getting me tongue-tied. All right, so that's the science. That's the science behind it. It's really just saying, look, let's look at historical data, find the numbers, and it just goes back to the last 5 trading days of December into the first 2 days of January, and statistically, it shows great upside potential, just overall. Now, should you guys go out and buy heavily the last 5 days? I don't think so. I think it's kind of risk off. And here's one of the reasons why. As we go into next week, right, volume is going to start to decline significantly. Most people even have the week after. So the last 2 weeks of the year, I don't trade. It's one of my rules. I do not trade the last 2 weeks of the year. Now, I may actually dabble a little bit with crypto because there's been some great moves. And plus, crypto is a 24-hour day, 365 market that does have slowing periods of liquidity, but it's never closed like the equity market's going to be closed for a full day, and then you have a half day, and then you have a weekend, right? It's just kind of troublesome to have that liquidity when I want it. So I don't trade stocks or futures or options on the last 2 weeks of the year, but I will be trading some cryptos if some opportunities arrive. Now, the volume can be significantly lower, and the reason I say that is if you have an Olympic-sized swimming pool, all right, and you go off the high dive and you jump in, and it's full of water, you're safe. That's called regular market hours. But remember, a lot of people are on vacation, right? If you try to get support at businesses right now, they're off, especially the financial world. They're all in the Hamptons, taking breaks and well-deserved breaks, right? Kind of take all that money that they've pilfered off of their clients. But they're taking time off. So liquidity dries up significantly. There is certainly people still at JP Morgan and Goldman Sachs who are manning the ship, but it's a skeleton crew. So if any sort of big order comes in, you can get dramatic moves. And at the end of today's show, actually, it's not the end of today's show. At the end of Tuesday's show, actually Monday and Tuesday's show, I'll tell you about some of the major statistics that are going to happen next week that could be massive drivers. You have PCE price index coming out, and you also have GDP numbers coming out next week, which right before Christmas on a thinly traded week could create absolutely massive moves out there. Is there something like a 3x inverse Kramer ETF? I don't know if that one is actually there, but it would be very interesting if somebody actually created an exchange-traded fund that moved the opposite of what Jim Cramer said. I wish. That would be really, really cool. No, I'm not sure. Dark pools are kind of a mystery, right? For you and I, it's a non-event, right? We don't have access to it. Dark pools are just simply, we'll just say anonymous pools of liquidity used by the major hedge funds and institutional firms. So how does that impact the market? Not significantly. So if I'm JP Morgan and I need to offload 100,000 shares of Microsoft, it would probably be a little bit risky for me to go just straight to the market and go like the level 2s like we would use at TradeStation or Thinkorswim. But I might be able to go to a dark pool and in just a click of a button, make that transaction. It doesn't shock the market, and then I report that transaction later on. How does it impact us? I don't think it has that big of an effect personally. I would rather see it done on the open markets with the time and sales so I can see all the transactions come through and see the liquidity in the marketplace. But nowadays in the equity markets, you can use reserve orders or iceberg orders and absolutely conceal an order. So, if you believe all the data that you're seeing in the open market anyway, it's all bluffing. So I don't really think that dark pools make that big of a deal. It just is a way for institutions to interact without moving the markets as significantly as they used to. Let's see. I think we lost our half-day holiday. Did we? Oh, yeah. Yep, you did. You lost the half-day. Let's see. The STA is free? Oh, Stock Traders Almanac? Yeah. $125 annual subscription. I mean, if you're really active and you love that type of stuff, it's well worth it. Absolutely well worth it. I mean, I have a few of them. The last one I got, I think, was 2016. But I like them. And there was a Commodities Traders Almanac, which is also really good because that shows the different patterns and seasonality of commodities, which I think is just absolutely fantastic. All right, so Lee, there's your Santa Claus rally. I think they're great, but don't get hung up on these mantras because they can absolutely kill you. Next, Mike says, it used to be that you could invest in brokers of stocks like Schwab, Merrill Lynch, Scottrade, Ameritrade, Dean Witter. You're dating yourself there, Mike. Why don't you go into E.F. Hutton while you're at it? Goodness. I can only find 3 now, Schwab, Interactive Brokers, and Robinhood. Are there any others that would earn money from increased trading activity and therefore rise in value? Okay, so let me address a couple things here. Yes, there are some other ones. Hey, happy Friday, Chris. Yeah, I'm hoping maybe I might be able to get up there for Christmas, and maybe if I can get up there, I'll see if I can swing by. Got to come out and check out the shop and find. Got to find my 1964 Chevelle that you're gonna restore for me. So first thing, Mike, is critical. It's you say in there. Are there any others that would earn money from increased trading activity? When you look at the retail brokerage firms, your Ameritrades, your E-Trades, your Charles Schwab's, your Interactive Brokers, it was real clear from reading their financial statements a while back that they're not making money from trading volume. That's not where the income comes from. Where they're making, because how much does it cost to trade stocks on Ameritrade? The stock trades are free, I believe. And most sites right now are free because of Robinhood. So thank you, Robinhood, even though I think you're a shady company. You did do free transactions, right, for equities. And the reason for that is you're selling order flow and you're making money on the other side of the trade and probably making more money than if you just charge commissions. But you look so good. Oh, Webull, there's another one, but I don't know if they're that public. So I wouldn't be buying these companies because of the thought that they would be increasing in price because of trading activity. What I would be interested in them for is these guys were making money by holding clients' assets and earning interest on those assets, whether it was straight cash or even the investments themselves, finding ways to make that turn into money. Kind of like in the Crypto Investor Live program, guys, I'm really focusing a lot on how do we point our money and put it somewhere where it's going to earn me more money. So Charles Schwab, arguably one of the largest retail trading firms out there, they have so many clients, so much money. For them, it's better to say, hey, you know what, free commissions on equities, just keep your money with us. Let us have your AUM, assets under management. And they'll keep that money and they will earn interest on that. And Charles Schwab, I forgot the exact numbers, but it was a big number that they were making off of interest generated from clients' accounts. So that's where the big money is coming from, not necessarily trading activity. Now, are there other ones out there that you could look at? Sure. I mean, there's a lot of different companies in that space. Now, of course, the big one that I would be going towards would be E-Trade, but E-Trade's gone, right? E-Trade got bought by... who bought E-Trade? Morgan Stanley bought E-Trade, and then E-Trade Morgan Stanley sold E-Trade to Axos Financial. So, they're still private, so you're not seeing that one go public. But there are some other companies that might be, I guess, noteworthy to look at. And, one of those could be something like Capital One. Now, they're not super heavy on trading, but they've got big client accounts. Capital One Financial COF, not looking so great. Actually looks like a head and shoulders pattern that's starting to roll over here. State Street, which is STT. There's another one in that space, looking great. It looks a lot better than Capital One. Boy, what's in their wallet? It looked like a downtrend waiting to solidify. Another big one in the space could be BlackRock. Again, I'm just kind of going after the big financial firms, not necessarily trading activity, because again, all these firms are doing the same thing. They're taking clients' assets and they're making money with it. And as we see rising rates, they'll make more money with the assets that clients invest with them. So there's your BlackRock. You also have, I guess, Bank of New York could be thrown in there, BK. Another one looking great. And then I guess Morgan Stanley. You don't want to talk about Morgan Stanley, which actually looks one of the weaker. So as far as good-looking charts, State Street, BlackRock, and Bank of New York, Morgan Stanley looking somewhat weak here, at least over the past couple of months, and then Capital One looking very weak. So those are some other ones you could buy into. As you mentioned, there's Charles Schwab's chart, looking great. Nice, actually, shooting star yesterday. A good one, too. What else do you say? Interactive Broker, yep. Interactive Broker, looking great. Same thing. How did I miss that gorgeous shooting star yesterday? Oh, my goodness. And for all of you who know how I trade shooting stars, this would have been a nice day. Man, a couple points, pretty easy, just following the rules. Last one is Hood. Stay away from Robinhood. Just do yourself a favor. I know some people are trying to catch that falling knife and, it's going to bounce and it's going to be back up to 30, 40, 50. Nah. No, they're getting bad press. They're selling order flow. And again, if they change the order handling rules for order flow, then this thing is done. Put a fork in it. So those are the ones that I would look at, Mike. Of course, there's tons of other ones out there, longer-term plays. Remember, financials tend to benefit from a rising rate environment. So careful shorting those ones right now. Again, in that list, there were a couple charts that look pretty nice. No problem, Mike. A pleasure, and thank you for always sending in questions. I know I don't get to them all right away. Apologies for that, but I'm a busy guy. Sometimes I can't get to them all. Yeah, thanks, Les. I didn't think TD Ameritrade had commissions for stocks, and that's just kind of the new one. That's the new one. No one wants to charge commissions because they want to get your business, right? Robinhood, when they started up, was stealing tremendous amounts of business from the big firms. So, of course, they're looking at it going, well, we have all the infrastructure and resources to absolutely crush Robinhood. We'll offer the exact same thing, and we have way better services. Plus, you don't see bad press about Schwab and E-Trade and Ameritrade anywhere near as much as you do with Robinhood. I mean, Robinhood's like amateur hour for traders. I apologize for people who are using Robinhood, but it's like Robinhood was doing advertising and targeting people who should not be in financial markets, in my opinion. Well, that was a weird noise. It's just going after people who have very little money, right? They're following the pack mentality. They're on Reddit and Wall Street bets and making absolute gamble plays. Unfortunately, that's not the right clientele to have. And there you go. The chart speaks volumes about Robinhood. And who knows? It could get bought. My guess is at some point they'll probably sell it. They'll sell it to a Goldman Sachs because all of a sudden Goldman wants the database. So Goldman will have the database and then offer them better services, make more money off of them. Let's see. Okay, I think that was actually all. I only got 2 questions last night. It was a quiet question day. Let's see. Did I get any others again? I could talk about dark pools. I really don't know too much there. Do you see us doing 25 basis points next year? Yes, I do. All right. Well, I think that might do it. Let me go through and show you guys what's happening for for Monday's trading activity. There really isn't a lot. There's a couple announcements earnings wise, but if you guys have any last minute questions, send them on in, and I'll hopefully get to those as soon as we wrap up here. But I'm getting close to the end, so send them on in. I'm about to go enjoy some sunshine since I finally got some sunshine. All right, economic data ruled this week. Clearly, it's all about CPI, inflationary numbers, and the Fed with whatever they're going to do with regards to tapering and raising rates in 2022. Next week, there are some more announcements coming out, but those are going to happen later in the week. So I will go in here and show you Monday. Here is the 20th of December. As you can see, only one announcement for the U.S. That's the CB leading index. Not very popular, not that big of a deal. But you do have CBI industrial order expectations for the British pound. You can see down near the bottom, we start to move into some monetary policy minutes from Australia, which could give us further clarity as to where they may be going with their rates. And that's pretty much it. I don't see a lot of major announcements there. Now, as we shift to the earnings, it's a very quiet week. But we do have 2 announcements, Micron and Nike reporting earnings after market close on Monday. Okay, there we go. So let's see. Margaret says, explain Bitcoin-backed mortgages. Okay, so this is kind of a newer phenomenon, but in my mind, it's actually a pretty risky thing, but it's a novel idea, so let's discuss it. A Bitcoin-backed mortgage is simply, let's say I'm looking to buy a house, right? And I got 7 Bitcoin. I'm going to make it an easy number. I've got 10 Bitcoin, right? I got to get a piece of paper out so I get all my numbers right. Thanks, Margaret, for making me do math as I drink whiskey. Not the best combination, but cheers to you. Okay. If I have 10 Bitcoin, and Bitcoin, let's just say it's trading at 50,000. I know it's not, but I just need easy numbers. So I've got 10 Bitcoin trading at $50,000. Well, that means I now have $500,000 worth of total value worth of Bitcoin. Everybody with me? Pretty simple math. I got 10 of these things. They're worth 50 grand each. That's $500,000 total value. I don't want to sell those. I don't want to sell them because I might pay a capital gains hit on it. I got to pay taxes on it. I'd like to use those as collateral. So a Bitcoin-backed mortgage is simply a collateralized loan. It's an over-collateralized loan. So let's say I'm shopping around and I see a house that I really like. I'm like, man, this is a gorgeous house. It's not in California. Well, you guys pick a state, but I'll say it's, let's go to, where would we want to move? I'm hearing a lot of nice things about Carolina. Let's go to North Carolina, right? I want big bugs and mosquitoes and humidity, so I'm going to go to the East Coast and go to North Carolina. And let's say I find a really cool house that's worth $500,000, right? Well, in theory, I should be able to just use my Bitcoin to buy it because I have $500,000 worth of Bitcoin. But I don't want to sell my Bitcoin. I want to keep my Bitcoin. So what ends up happening is I can go to, I think 1 or 2 firms that are doing this. I think there'll be a lot more down the road. And I basically say, okay, I'm going to give my 10 Bitcoin to this firm. Let's call it Merlin's Bitcoin Loans. I give my my 10 Bitcoin to Merlin's Bitcoin Loans, and they say, okay, you've got $500,000 worth of Bitcoin. How much is the house you're looking to buy? And I looked at it and said, okay, it's $500,000. So basically, the combined value of those assets is $1 million, right? I got $500,000 worth of Bitcoin, and the property I would like to buy is $500,000. So that's $1 million worth of assets. What they will do is they will give me a 50% loan to value on the total combined asset. So since it's $1 million combined with the Bitcoin and the property, they will give me a 50% loan, meaning I can borrow $500,000. Okay, great. So now I can pay for that house right away with the $500,000. It's because they're using that house as collateral, right? It's now property of Merlin's Bitcoin loans. Is this good or bad? Well, I think it's certainly risky, right? I think it's brilliant because it allows me to hold my assets, which could be going up in value or down, right? That's why they're only giving you 50% of the combined asset, is to accommodate for the fluctuations in the price of Bitcoin. Now, what they also do is they reevaluate the lending terms. I believe it's every 2 years. It depends on the firm, but a year or two, because the dynamics of that market could change, and therefore they may require you to put some more money in to cover the risks. Who knows what all the different terms are? But in essence, Margaret, this is kind of what I'm doing with my crypto now, right? I'm lending it out to somebody else, but I'm just collecting interest on it. In this case, with the Bitcoin-backed loans, I'm lending my Bitcoin to that individual or that firm with the promise that they're going to give me a loan. Now, why would I want to do this? Well, if you've gone through a traditional lending process, it could be very lengthy. There's all sorts of credit approvals, and really it can be very long and cumbersome and annoying with all that you have to prove. With a Bitcoin-backed loan, how simple would this be? Well, I deposit my 10 Bitcoin there. They got my personal information because I'm sure there has to be some tax reporting, but I have the assets. I no longer need to get money because I don't have any. I simply need to use my assets to extract money out of that and use that to buy an asset. Does that make sense? Can you get a margin call on the loan? Yes. So one of the things I was interested to see with the mortgage-backed loans is, with a normal loan, you don't make your payments, you're done. Well, with this, they give you a longer lead time before there's any sort of lockdown. So they'll let you know when, hey, you might need to put some more money in here because you're getting low on, if Bitcoin falls 50%, now you're in trouble. I don't think right now that's a great idea to be using a Bitcoin loan for real estate, just simply because if we do have a housing market crash, remember, it's the combined value of those assets. So if the housing market falls 50%, I'm stretching it, probably not going to fall 50%, but what if it does? It happened in 2008, so don't hate me, realtors in the room. If it drops 50%, then all of a sudden, I've got $500,000 worth of Bitcoin, $250,000 worth of a house. Now all of a sudden, my loan terms start to get wonky, and I don't know how they do all that back-end pieces. The other side of it is, what if Bitcoin falls 50%? Now all of a sudden, I'm in a rough spot. So it adds a lot of, in my opinion, stress and unknowns to the equation. But what a great way for you to take your capital and then reinvest in something else. Right now, I'm lending out my crypto to God knows who, and I'm receiving income streams for that. I like that. But I could also, let's say I did my market timing right, I could deposit my Bitcoin without selling it, buy a piece of property that's undervalued, and the property value goes up, my Bitcoin rises in value, it's a win-win. So it's a pretty cool concept. I think it's relatively new and it's going to have some kinks worked out, but ultimately I have a feeling you'll see this a lot more because Bitcoin is money, right? How does interest rates compare to traditional mortgages? Good question, David. So, your traditional mortgages right now, you're getting 30-year fixed for 3%. I'll say 3 and change. From my understanding, they're going to do it between that and there was a higher rate. I forget what the upper rate, but it's going to probably be between that rate and like 9%. So my guess is you're like 6% on that loan. Higher, and again, it's opportunity cost. If you don't want to go through all that paperwork and have all this information given away, you could just do it with crypto. It's interesting, but I'll probably still go with my Fannie Mae and get my 3% loans as opposed to, paying 6-7%. So there's your, you guys both kind of have the same one. They're not that, from what I was reading, it's between the base normal rate. So you won't find a Bitcoin loan that's going to give you 3%. It's not going to happen, right? They need to make their spread. I forgot what the upper rate was. The numbers I was looking at were like 9% is the peak for one class, and then they said they're in between those two numbers, which should get it to be 6 or 7%. Relatively high in my opinion. So, it's a trade-off. At some point we might have to, look at that one much more seriously, but it's just starting out, so I wouldn't worry about it. Is capital gains tax on crypto the same as equities? Right now it is. Right now it is. It's this not an it's the same as an investment property, right? It's like buying a house. It's an asset at this point. Can you trust this transaction? Could they cheat you out of a Bitcoin? Yeah, it's a good point. No, I mean, I'll be honest, I'm not going to do it. I don't see myself really buying any more properties anyway. I'm pretty good where I'm at, but you know, I don't know. The interesting thing is the companies that are going to do it, if you ever decide to do this, do your due diligence, because you want to have ones that have big, major money backing and big firms involved, right? You don't want to have just Tony's Bitcoin-backed mortgages. That would be kind of shady. Sounds like you go to a pawn shop. I think it's significantly better than a pawn shop, right? But at least I think the best part about it is you can keep your Bitcoin. If you're like me and you think that in the long haul, you give me a 30-year mortgage back to Bitcoin, I'll pay for that mortgage no problem within 30 years of Bitcoin, because it'll keep going up over time. Granted, we'll have these fluctuations like we are right now. How are you doing your push-up challenge? Doing great, Tom. I am still doing it. You bet. Heck yeah. I mean, for those that are still in it, you know, maybe give a little props here. I'm still doing 100 push-ups a day. Granted, it's been a struggle some days, but Tom, you're doing way better than me. You got 100 push-ups, curls, and lunges. It's going for that full body. I just want to have the big upper body. Forget my legs. I got little chicken legs. Les, you're still walking 6 miles a day. Goodness gracious. An hour of trading education, half hour reading. And let's not forget, the most important part is Les spending more time with his wife. I'm sure she loves that. Just don't tell her that was part of a challenge. That you had to challenge to spend more time with your wife. Tony's doing some singing lessons. All right. I can hear it in the music, Tony. You're sounding great. And a half hour of gym. Michael's got to walk a mile with 2 dogs. Or maybe just take the dogs are going to take you for a walk for a mile or longer. I'm sure they love it. And Peter's running 3 miles a day. So all of you that are doing your challenge, awesome, good for you. Stick with it. Keep pushing. I know it's I don't bring this up every day because I'm sure some people are like, this is annoying. For those of us that are in it, it's nice to have that camaraderie and know that there's other people with you doing some kind of challenge. So get ready for January. With regards to your challenge, I'll do this again. I hope to have the whole page full, get more in there. Everybody comes up with New Year's challenges, and most of them give up by February 1st, right? How many people, the worst time in the world to go to the gym is like January 1st. It's horrible. It's just packed with all these people who don't even know what the equipment is. Like, I'm going to the gym, and then they're like, I give up after 3 days. Let me buy a bag of Twinkies and call it a day. So yeah, I'm going to modify mine a little bit. I may go way past my comfort zone, but we'll try our best. All right, I think that's going to do it. It's a short show today, guys. Dang. Oh, yeah, we got Bitcoin-backed mortgages out of the way, and how can you prove to authorities that it was your crypto you loaned to an investment house? How can you prove it? I mean, in theory, you could do it with the blockchain, but what are the authorities going to do? I mean, are you talking like regulatory agencies? Because if I want this loan, I'm going to lend it to, I will transfer my Bitcoin to that firm's wallet. That's the issue. So they technically would own it, right? Or it could be done a couple different ways. I would be uncomfortable giving my cryptocurrency to that firm outright. But what we could do is we could, and this is probably the right way to do it, is do a smart contract, right? And in that smart contract, it says, I deposit my 10 Bitcoin, and for that, you give me X amount of dollars, and then here's some terms. If this happens, or this happens, or this happens, my 10 Bitcoin go to that firm. If this happens, or this happens, or that happens, the Bitcoin come back to me, and I pay interest. So I would do it all through a smart contract. Therefore, it's much more trusted. I don't trust the person on the end of the line with regards to that transaction. But if we both put the assets into a smart contract, at that point, you don't have to worry about that person being a shady character, because the contract will be the one governing all the rules without emotion, saying, well, this condition's been met, therefore the Bitcoins come back to Merlin. The guy can't take off with them. Does that make sense? Can you tell me what a call sweep is? Like, I don't know. I don't know, Jay. I look at Verizon, Pro 3.5, VZ. Man, hell of a couple days. Did they have earnings yesterday? They may have. I remember hearing something about Verizon. But technically, what does this look like? It looks like garbage. This thing looks bad. Just nothing but downtrend. Now, I guess the question for me, Pro 3.5 is, or for you as well, if you're interested in it, is where's that buy point? Now, obviously, everyone wanted to buy yesterday, right? Or pick the bottom here. Well, good luck with that. you're still in a pretty pronounced downtrend for this year, especially from those May lows. So whatever reason, this thing's gone from 60 down to 50. That's not that bad of a decline. It's only $10. So in the grand scheme of things, it's not brutal. But, where do you get comfortable saying that this short-term downtrend is reversed? Is it above $54, which is this peak right here? I'd hate to say it, but even though it's kind of far away from current price, I mean, well, not that far. You got 84 cents away. That would probably be my point where I would say, okay, this downtrend has been reversed. We're starting to make some new highs and get past some major turning points. So that's what I'd be looking at. I don't like the price chart. It's really been an ugly stock for a couple of years now. Real ugly. And this is the challenge with equity markets or just trading in general, is a lot of times we look at this and we say, hey, you know what? It's got to bounce at some point. It's got to go up. Look at this is a good one. Rivian. Check out Rivian. Rivian got slaughtered today. It's funny because I've had people tell me how great Rivian is, and there probably are great trucks. They're probably really good. But, again, with the ICOs, not ICOs, with the SPACs, you get a lot of this huge pump and then comes screaming back down. What's BAC doing? I haven't checked it since I dumped it. Oh, look at that. Boy, now I'm glad. Ooh. I'm hoping that everybody that was in backed with me got out, right? I got out at 17. I bought at 15 way back here and held it for this whole period. It was just awful, miserable. And then again, it jumps up. I got out at 17 and I was kicking myself. That thing ran all the way up to $50. You got to be kidding me, Right now, back to 9. So, happens all the time. And how about the big one, DWAC? Mr. Trump is dealing with his. Still holding $50. Blown away by that one. Blown away. Robinson Lee, how can you choose to sell certain crypto coins to lock in long-term versus short-term gains, similarly to picking shares to sell in equities using Coinbase? Well, first off, you wouldn't use Coinbase to do your technical analysis, right? You would find a platform that gives you a better drawing ability to see better prices like this. So this is, again, here's one that I'm interested in. Maybe I'll get executed over the weekend, but Sand, which you cannot get on Coinbase, but I'm looking to buy it as it comes down here. I've got an order right now at $4.28, just waiting for it to get there. But if there was something that you wanted to sell, Robinson, and you found it, you say, oh, how am I picking my sell points? I'm using supply and demand. I'm using, a lot of times with this, it's really about getting, if it's overextended, if it moves too much. I'll give you an example. Litecoin. Back here, back in here, we had this move up. I think it was this one, or actually it was this one. This move up here where Litecoin went just parabolic. I ended up dumping my shares, right? I sold out of everything, and I sold out at 295, and that was on the second attempt at this zone. So I had a target, and of course I'm kicking myself because it went from 295 all the way up to 410. But then it came crashing back down, and I bought back in. I bought some at 232. I bought some at 177. So, I saved myself $60 on one purchase. I saved myself $120 on the second purchase. So that's how I'm doing is I'm targeting levels where I think I would like to get out. And if that happens, like Stellar Lumens is another good one. Let's go Stellar. Let me just find the level where I got out. I got out right here. You can see where it spiked up. So I've been in seller for a long time and hadn't done anything. It's kind of traversed sideways. And I said, you know what? If it comes back up to this high at 42.50, I'm selling. So I put limit order in to sell at 42.50. Unfortunately, on Coinbase, you can't put in limit orders. On Coinbase Pro, you can. So I would go to Coinbase Pro, and you can put limit orders in on your positions and sell at whatever prices you like. So there you go. Selling crypto, I want to lock in long-term gains, but afraid if I sell, Coinbase will sell my short-term holding versus my long-term. I think it's more about how you report it, right? I mean, personally, like for mine, I don't know what documents I'm getting from these guys, but if I bought, if I bought a Bitcoin and it went up $50,000 in value and I held that for 19 months, it's long-term capital gains. If I got out of it in 6 weeks, okay, it's short-term capital gains. So I don't know. I don't know how they're reporting that, but that's it. Are you using a daily or a weekly? Generally, when I start with the daily, I know that there's some that love the weekly time frames. That's awesome. Great. My preferred chart is the daily time frame. That's where I prefer to do. Yeah, it should be first in, first out, last in, last out. Correct. FIFO. Or is it, yeah, FIFO. All right, guys. I'm looking at the clock. Done time. We're not going an hour today. Sorry for that. All right, so we went through economic announcements for yesterday, or for Monday. We went through the earnings for Monday, went through the challenge, we went through our questions. It's going to be a great weekend. I hope that you guys go out and do something fun. Enjoy things. It's going to be a wild week next week just because of low liquidity and some big announcements happening Tuesday and Wednesday, which I'll tell you about on Monday's show. So cheers to everybody. Hope you have a fantastic weekend. Again, if you have any comments, questions, feedback, things you'd like us to discuss, you can email me at the name on your screen, which is TraderMerlin@gmail.com. And for those that can't spell Merlin, which they always seem to get it wrong, it's Merlin, like the magician. That said, you guys have a fantastic remainder of your day, and I will see you all on Monday. Take care.